You're looking for a solution to get your finances under control. You found Family Credit Management, and that's exactly what we can help do. We've been working with people in your situation for over 20 years. Whether or not you have credit cards, payday loans, collection agency, loans, personal loans, medical bills, whatever type of unsecured debt you have, we've dealt with it. And we've seen every situation from people being sued and garnishments to people just with a whole bunch of credit card debt they feel they'll never be able to get out from under. We have worked and we have helped with that situation, and we can help with yours. What we provide is one place to pay with our debt management plan. We provide that most of the creditors will reduce interest rates, reduce fees they're adding on, stop calling you, call us when they have questions for you, and they know that you're going to be much more inclined and want to talk to us than talk to them. So a lot of these things are able to happen. Next thing is, why should you choose Family Credit Management? Well, we've been doing this for over 20 years. We're licensed throughout the country and have great relationships with over 10,000 different creditors. So while it may seem like it's an awful good plan, I can also tell you that we've got a lot of people here who really care about helping, and most of our credit counselors and most of our customer service staff have been in a situation very similar to the one you're in. We really do understand. We really do care. And talking to us, you'll see that we're here on your side.
Good evening and welcome. My name is Letitia Griffin, and I'm a certified credit counselor. We are here with Family Credit Management for the next 30 minutes just to sit and talk to you about your debt, finances, any problems that you may be having, any questions that you have about debt, finances, anything like that. Feel free to give us a call and call in with your question or comment. Or if you don't get time, you can contact Family Credit at 800-994-3328. There's great counselors on standby just waiting to help you and answer your questions. One of the great things or the great resources that's offered is actually being able to talk to a counselor when you need to. And so if you don't make it during this time frame, you can go online to familycredit.org and contact a certified credit counselor through chat and actually get the answers that you need. So that's a really great feature. I want to advise you to take advantage of any resources that you can find. And speaking of resources, guess what? This week in Illinois is Money Smart Week. Money Smart Week it started on Saturday, but it's running throughout the city, throughout Chicago and the suburbs, throughout Illinois really. And you can find so many different presentations, and if you need help with a certain financial topic, there's so many social service agencies, banks, financial institutions, credit counseling agencies, everything just willing to give you that information and kind of tailor it to your needs too. So if you go to moneysmartweek.org, you can find a listing of every presentation that's happening throughout the city of Chicago, and feel free to take advantage of it. Tomorrow I'll be at Bolingbrook Public Library, and we'll be talking about money matters too. So that's at 10 a.m. during Money Smart Week. So now that looks like we've got a caller, our first caller, and then we'll get into our topic. Hi, caller. Welcome to the show.
Hi, Letitia. I was wondering, I was previously in financial debt, and now that I've come out of it and I'm starting to be on track, I'm wondering if there's some type of budgeting formula that would keep me from going down that road again and falling into more debt than I can handle.
Well, that's really a very detailed question that we can go into, and we can just talk about that for a minute, your situation. Now, when you are recovering from debt and trying to stay on track, you have to be, first of all, you have to be realistic, and you have to be honest with yourself to be able to discipline yourself and know where you stand, what your income is, and what your expenses are. And I hear a little feedback. Are you still there? Okay. Looks like we've gotten disconnected, but there was some static on the line. But when you're looking at your situation and you don't want to remain in and you want things to get better, you have to look at where you're at and look at where you want to be. So you want to start with looking at your income and figuring out she asked for a formula. I'll give you the formula for actually seeing what your perfect budget should look like. And this is just the guideline that's recommended. If you don't get a chance to write this down, you can contact Family Credit and they can send you out my personal spending plan or Personal Finance Made Easy, which has this very formula inside. Now, what you need to do is look at your income and take 30% of that income. Now, when you think about that, if you're only bringing in $1,000, then that amount is kind of easy to figure out. $300 is what you should have, and that $300 should be dedicated towards your housing expenses. When I say housing expenses, I don't just mean your rent or mortgage payment. No. It's more than that. You want to look at your rent and mortgage payment, your utilities that are included in there, taxes and insurance, any type of upkeep and maintenance on your property. So that's your housing expense. Next, you want to look at what's 20% of your income. That 20% needs to be dedicated towards auto transportation expenses. And that's not just gas. That also includes your tags, license and registration, any type of insurance. All of those things need to be included in that 20% figure. Next, you may want to do another 20%, and that has to be for your debt payments. Not your utilities, but your actual debt payments. If you've got credit cards, medical bills, collection agencies, things of that nature. And then you want to look at another 20% which you use for going out, community, any type of outreach or fun that you may be having should only be in that 20%. And then lastly, 10%, which would be to pay yourself. Now that is what a perfect budget should actually look like. I know a lot of times we struggle and our budgets look nothing like that. But if you take that amount and use your income as your guide and figure out what those figures are, then you can play around with it to see what your actual perfect budget should look like. And you should actually know how much should be dedicated towards each and every single category in your budget. Because you want to make sure that you make your money work for you. We work hard for our money. And one of the things that people, once they work hard for their money, a lot of people want to see, how do you make your money work? What do you do? How do you live day to day? How do you live month to month? And we struggle with that because a lot of times we don't know where our money goes. So the next few weeks we want to touch on some things to help us figure that out, because we want to make smart money choices, especially with Money Smart Week being here. We want to start off by trying to make smart money choices. And the one thing that we need to look at is, what are our goals? One of the most important goals that you may have would be home ownership. So we want to look at what are the reasons that you would want to own a home. Should you choose owning a home over renting? For some people, renting does work, so we'll touch on that today. Also, we'll look at what are the things needed for you to actually get to the point where you are able to obtain home ownership. So those are some things that we will look at today. Also, next week we'll take a look at overcoming credit challenges too. So if you want to tune in then to continue that, we'll look at that too, especially if you're looking at getting your budget under control and reviewing your finances. Now, when you're thinking about whether you should actually buy a home or you should continue renting, what's one of the top reasons that you may want a home? Sometimes you get mad about your situation, you don't like your landlord, you don't like your area, and a lot of times we make rush decisions. But home buying, or whether we should continue renting, that's a decision that affects us, and it's something that we actually need to sit down and think about. The first thing that I want you to think about is, how do you actually feel about renting? How do you feel about buying? And you want to be honest with yourself. What are some key reasons why you want to rent? Property management, really not a lot of upkeep. So that may be important to you, especially if you're busy and on the go. But then think about it. When you own a home that's yours, it's something that you have. And yes, it may be a liability, but it's a greater asset than it is a liability. Also, you want to think about, how long do you plan to live in that area? And if you're thinking maybe less than 3 years, then you may want to continue renting. But anytime you want to think about just setting up roots or just establishing a community relationship, you want an area where you're going to live in for a while, you want your children to live there, then that may be an indication that you're ready to buy. Also, you want to look at the interest rates if they're affordable too. The interest rates fluctuate, but right now they're pretty low. So now would be a good time, if you're considering it, to think about it before they get too high. And then you want to think about, can you afford the down payment? There's so many different programs out there that will offer down payment assistance or some sort of credit so that you don't have to put that much money down. If you're a veteran, there's really great options out there for you, and that just may be something that you want to explore. Then you also want to think about, is your income and your savings enough to cover your expenses? Now that's a big thing that sometimes it slows people down and makes them think twice about whether they should buy their own home. And it could possibly be because they don't feel that they can afford it right now. So you want to think about that, those extra expenses that we don't think about, and tie that in. Now, what are some key reasons for you to own your home? And there are a few reasons that come to mind when I think about that. And the first thing is that when you own a home, there's a huge tax benefit for that. Now, the U.S. tax code will let you actually deduct interest that you've paid throughout the year. And not only interest, you can deduct the interest paid on your property taxes too. And sometimes, as soon as you buy the home, you're able to deduct a huge portion of the cost that it costs to buy the home. You can deduct that on your taxes as well. Next thing you want to think about is the appreciation of your home. When you have a home, that's the one thing that really doesn't depreciate in value. Over a long term, it'll actually increase. So you actually want to think about that too. Think about the equity that you'd be making in the home too. So we'll talk about that a little bit as well. Actually, think about the savings that you have too. When you buy your home, the equity builds up in your home and its value that will increase over time. Now your equity will build up and you'll be able to liquidate it if you want to actually sell the home. And another thing that you want to think about is the freedom that you actually have when you actually purchase your home. It's yours. You can decorate it as you please. Looks like we've got another caller. Hi caller, welcome to the show.
Hello.
Hi, you have a question for us?
Yeah, I need to repair my credit. Someone suggested getting a secured credit card. Can you explain what that is?
Sure. When you think about a secured credit card, it's really a great tool for you to repair your credit. With the secured credit card, you will take a certain amount, and usually if you can save about $200, you would take that amount and you would put it down as a security, as collateral on the account. And what you do is you give that to, let's say you call a bank. You go to your bank and you put it down. They hold that as collateral and they will give you a credit card. The great part about that is that you didn't have to sign up for it. They didn't have to ding your credit for it. They didn't pull your credit. But because you put that $200 down as collateral on the account, you automatically get a credit card. And with that credit card, you make your payments each and every single month. You use it just like you use a regular credit card, and it helps you to rebuild your credit. Over time, it will actually strengthen your credit so much. After a year of you actually having it, it looks just like a regular credit card on your credit report. So people think it is a real credit card, and as you keep making payments on it too, a lot of times the credit card companies will send you that security deposit back. And that actually becomes a regular credit card account reporting to your credit bureau. And it took you less than a year to actually have it, for you to make payments on it, and for it to improve your score. It's a really great tool too. If you're thinking about repairing your credit, secured accounts are a really great tool. And you can go to bankrate.com and they have a listing of actual secured accounts that might even work for you. There's a few programs out there, so you do want to make sure that the account that you're getting is a a secured credit card, not a debit card, and not a regular credit card. So those are just some great tips about using a secured account. Now let's get back to talking about home ownership a little bit. Wanted to bring this up because I've had quite a few people ask this week, well, what do I need in order to get a home? I'm tired of renting. I just want to be able to buy my own home, and right now is the home buying season. So when you think about it, you want to make sure that you can actually afford the home. So what do you think the first thing that they're going to look for? They want you to have steady income. And when I say steady income, a lot of people think, well, I have a job, or I get paid, or maybe I'm self-employed and I'm not sure if I can afford that. So you want to make sure that you look at your income. Again, if you're looking at your budget, we set up that perfect budget plan. And remember how we went over that 30%? That's a good rule of thumb to use to even figure out whether you can afford a home or not. So when you take your transportation expenses and your home expenses, that gives you 50%. So I want you to use 50% of your base income just to figure out if you can actually afford a home payment. It may seem a little out of the ordinary, but if you look at 50% of your income and you feel that you can take that 50% of your income, still have your home payments, and still make your payments on your transportation, anything like that, and you're still able to live with that other 50%, then you might want to look at home ownership. And one of the things, a lot of times people feel like if they don't get a W-2, then they are not able to buy a house. But that's not true, because if you're self-employed, you probably don't get a W-2. And you want to look at what income does qualify you for home ownership. Now, think about that. The one true way that a lender can tell that you qualify for a home, they're going to check your taxes and your tax returns. So that's really what's important. What's been reported to the IRS the past 2 years. And anything iffy, you probably have to explain it. If you've got any credit challenges, you can contact Family Credit at 800-994-3328. And the credit counselors are more than happy to assist you. You can contact and ask any question about how to repair your credit, how to get over credit challenges, and prepare yourself for home ownership. When you're looking at those credit challenges, a lot of times people think, well, I've got crappy credit. I don't even know what my score is, or my score is too low. And I hear that all the time, but a lot of times if you have never really looked at your credit and you're not paying attention to it, it's probably not as bad as you think. So it's always good to go ahead, pull your credit score, pull your report, and see what you're working with. And calling Family Credit is a great way to stop with that. The counselors there, they're waiting for you. They can pull your score. They can go over your report with you, tell you what's on your report and what you actually need to do to get things in order. So that's a great tool, a great benefit for you to actually be able to get your score for free and to talk to someone about what steps you can take to improve things on your credit report. When you're looking at your credit report, a lot of times you do get inundated with all the information on there. You may not be able to understand it. You may not see the importance of one account on it, or you may think, I paid that account a long time ago and it's still there, so they should just remove it. But if you're not doing the work, you're not being diligent, looking at your report, or talking to someone to actually get the right help that you need, then you're not going to make any type of improvements on the report, because the report sits stagnant if you don't do anything to make it better or make it worse. Hopefully you're not doing anything to make it worse though. And if you are, don't feel like it's the end of the road. Start where you're at, pick up right then, and go ahead and work at making it better. So when you're looking at your credit challenges, you want to look at the most recent things that have happened, because those are the items that you want to tackle. Those are the items that creditors look at. Those are the items that the banks look at. They want to see what's happened in the last 2 years that's caused you some type of fluctuation in your score, or caused you some type of heartache or anything like that. If there are any collections on there, those do need to be taken care of. You want to look at trying to set up payment arrangements, and you want to look at whether you should pay those or not. And sometimes you may feel that they're old, you don't need to touch them, or they're new and you're not sure who to contact for it. But there's help out there. The counselors are on standby to answer your questions and to help you through that, and they can pull your credit report for you. So again, that number is 800-994-3328, 994-3328. Now it looks like after you look at what your income is and you looked at your credit report, and I want you to take another look at your credit report and look at the personal verifying information on it. A lot of people don't know that there's a lot of information on our credit reports that we may not even pay attention to. They could have the wrong name, the wrong address. They could have your report mixed with someone else's. You could have old employers or even no employers reporting on that. So you want to pay attention to that section too. Now keep in mind that the way that things are reported to the credit bureau, that's the way that the lenders see them. So if your street address isn't spelled out, for instance, that's the way that if you try and pull your credit report and they ask you to verify your street address and you put it in wrong, then sometimes it may not pull. But any problems that you're having on that report, anything that you see that's wrong, feel free to contact the credit bureaus and start a dispute. That's going to go a long ways because the disputes will actually help you. And keep in mind that while an item is in dispute, that item is not factored into your score. It's like we've got another caller. Hi, welcome to the show.
Hi, I'm getting a lot of collection calls from different places, and I'm just really unsure on how to work with them or set up payments or what I should do on how to deal with collections. I just really want the calls to stop, and I know it's affecting my credit.
Okay. So many people struggle with that too, so you are not alone. When you're looking at all the different phone calls that you're getting, sometimes they could be warranted. Sometimes there are your collection calls, but then again, sometimes it can be a scam too. So I do want you to be aware of that too. Try and pay attention to the numbers that are calling you and look at your accounts and make sure that they're yours. Now, there's two reasons why I tell you to do that. But for the accounts that are yours, I want you can tell those creditors to leave you alone, and there's a way to do it. It's called a cease and desist. And what you're actually doing is you're taking down the information of the person calling, and I'm not telling you to give them your information, but take down their information so that you can do a little investigating on your own. Maybe see if you want to file a complaint against them. You can file a complaint with the Better Business Bureau, with the Consumer Finance Protection Bureau, and with the Attorney General's office. The great place to start is with the Consumer Finance Protection Bureau. But before you get that far, take down the information, and you want to find the address and phone number, maybe a fax number for the representatives that are calling you. If the debt is legit and you want to challenge that, but you still want them to stop calling, you can write them a letter and fax it, send it in the mail, certified return receipt. You want to have some sort of proof that you sent that to them. I don't suggest that you do anything other than that. You don't need to talk to them on the phone or anything like that. But you do want to tell them to not call you. If you've got problems with that, then you can contact Family Credit and you can have a certified counselor set up a repayment plan for you. They can contact your creditors and get them to stop calling you. And that's better than you doing it on your own too, because now you've got an advocate or someone that's standing up for you, working on your behalf to get everything in order for you. And those collection agencies, they have to abide by whatever it is that you're telling them to do. If you're telling them not to call you, then they shouldn't be calling you. If you tell them to just send you mail correspondence, don't bother calling you. They have to abide by that. Now, when you're looking at cease and desisting, we'll talk a little bit more about that next week. So if you want to tune back in, then you can have any questions that you have. You can ask any questions you have during that time. We look forward to seeing you again next week. Take care.